All right. So welcome today to the Business Loan Broker Challenge. And I'm super excited because we're going to be going over a lot of exciting information of how to make money. Right. So yesterday we talked about the mindset. Today we're going to be talking about exactly how to fund your clients. So again, a lot of products. And what I'm doing is just literally giving you the probably like 1 to 3 that I'm going to dive deep today to make sure that you guys can apply to start making money. Everything else you can still make money with, but then these are the hottest products right now, and I'm gonna break those down. Yeah. So we're going over the different funding strategies. But before we go into that, how much money you're gonna be making, I want to talk about one thing, right? And that is the value equation. Like what is the value of money? How do people determine how much money is worth? And this is gonna be super important to understand because we're selling money, right? So let's talk about the law of equivalent exchange. Well, I want you guys to do this exercise with me. So if I have $1, and then let's say, Monica, like I give you $1. Like how much money will you have, right? Like you're gonna have $1, right? And then if I tell you, hey, like right now I'm gonna give you another $1 and you give me $1, how many times are you gonna do the transaction? Maybe not a lot of times, right? Or at all, because you're getting the same amount of money back and forth and you're not getting more, right? You're not getting more. So what about if you gave me $1 and I gave you $20? How much money do you have? You have $19, right? So how many times are you gonna do that? And let me know in the chat, how many times will you do a transaction? You probably keep doing that until you get to $1 million if you have the time and patience, right? Because you will do that every single day. Why? Because the value of your dollar just became not 19. So you're getting more in return. So after a monetary transaction happens, a contract happens, whenever the perception of value of the dollar that's being exchanged is higher or for based on the other party's perception. Now, how do you assign the value? Right? With traditional products, most companies they're gonna connect it with the emotion, right? The emotional value of the dollar transaction. How? I don't know. Let's say you're selling a Ferrari. You're gonna post it, I don't know, middle-aged guy or a younger person, like everybody paying attention to them, and then you want that attraction, you want to have people looking at you, then that's gonna cater to you. Now you have an emotional value connected to that because that person is craving attention. So they want to get that. So now how much that attention is worth, that's determined by Ferrari and then also by the person. With what we're doing, the exchange of money and the value of money is super clear. You give me $1, sorry, like I give you $100, you give me 10. So for every $10 that you give me, I might get you 100, right? So they're going to keep doing that transaction every single time. And the value is clear. Especially when you're selling something and we're selling money, which doesn't really have to be sold itself. Money sells itself. The value is very clear upfront. And the easier the transaction is and the more clear the value is, the higher the chance a person is going to do the transaction every single time. The more things you add to exchange that into a transaction, and the more time you have to spend presenting the value for the exchange, the higher the chance that the person becomes confused and they don't do the transaction with you. So once we understand that, we're offering a service that provides almost a 10x return on average, right? For every single dollar. It's a no-brainer. And then that's how you should go into every single conversation with your clients, knowing that they're going to be getting way more money than what you're getting. Like that's a benefit. So that's the exchange of money, right? So, sometimes I just go on my own. So I'm going to skip all the slides. So we know that value is being exchanged with our clients, right? We get $1, they get 10, right? Sometimes more, sometimes 20, sometimes $30. So our clients, 9 times out of 10, if they really have a need for the money, they're going to say yes to your fee. And that's how you have to go in confidently when you negotiate your fee, or if you negotiate at all. We don't negotiate it in most cases. Right. And then on top of that, it's so sexy to sell this product because in most cases, they don't have to pay upfront. Right. They don't have to pay upfront. Like they pay us after we have offered the result. Once they get the result, they give us the money. Right. So it's no risk on their side. Right. They just expect us to do our job. And then we process application, we get them the funding. All the risk falls on us. Right. So in most cases, we're not going to charge upfront. They pay you after they get results. So it's a no-brainer, right? Now, is that clear? Did that make sense? Do you guys see, was that helpful as far as like exchange for money in this business, let me know in the chat. Type some ones if that's valuable, if that makes sense. If not, I'll keep updating this presentation as long as I keep doing this. All right. So let's talk about the customer workflow. So this is how it works. You acquire a lead, you hold a sales conversation where you're pre-qualifying the client. So you're trying to find out to see if you can get them funding. How do you do that? On the resources, on the school community, we have the scripts. I just post the script on the link for the scripts in the chat. So they have it. The people that are still trying to get into the group. So you can hold this discovery conversation where you just have trying to qualify the client, right? After you hold that first discovery call, right? This first call, then we'll move up to the qualifying phase. To qualify a client, we need to review financials, credit report, or bank statements, either one. Every funding strategy is different. So before we review credit reports, we need to identify the following. Not all credit reports are made the same. I could have a profile with a 680 credit score, way stronger than your 800 in the eyes of the bank. Do you guys want me to break that down? Like, you want to see some live examples, or you just want me to keep going to the flow? Let me know.
Break that down, please.
Gotcha. So we just posted the discovery call script. Jen just posted it, so you guys can get access to the scripts. So you can make sure you grab that link. Let's check some live samples. Give me 1 second. Let me get us some stuff real quick. All right. So there are 4 types of credit profiles. And Lombard will analyze all this stuff for you, so you don't have to do it. However, it's good to understand. So we're going to start with a bad profile. Super easy to identify. 670, 670, 680. And some people, oh no, I thought they have good credit now. Like, they don't have credit. That's like a good to fair to average. So what's happening to this client? Delinquent, derogatory. Not much that we could do here. A lot of inquiries. Utilization might be high. I'm not going to calculate the utilization. So that's a bad credit report. That's super easy to see. Somebody has late payments, collections, like that's going to be tough to fund the traditional route, right? So that's a bad spot. I'll take a look at one more real quick. This one, it's not that bad, but they have high utilization. Not much that we can do here. Now let's take a look at a team profile. All right, what is a team profile? So look at this. You get this profile, you're probably counting the money. You're like, hey, wait a minute. 800 plus credit score? How am I about to make bank? No, hold your horses. Let's take a look at this. Average account age, 5 years, which is good. Utilization is good. However, look at the limits. $1,300. There's something off here, right? So they have barely extended credit. So the banks are not going to give them a lot of money. So you process the application, and the plan is, oh, what happened here? I have a 100 credit score, Mr. Customer. You have a team credit profile. It's missing some meat, right? So this is not the best profile. Will we process the application the client pushes us to? We would, but we're going to let them know up front, hey, the chances of us getting you a lot of money is going to be a little bit thin, like your profile. All right, don't say that. Don't say that. So again, this is a team profile. So team profile, they don't have a lot of meat. They don't have a lot of products. It's not diversified. They don't have a lot of accounts. So this profile is not the best. Let's take a look at another one. 750, low utilization. You counted the money, account age, less than 2 years. Enough open accounts, but it's also a red flag. If I open accounts, only $6,000 in available limits, not good. Can we get them funded? Yeah. 40 to 80,000, but not a lot. Oh, wow, 740. Utilization, 4%, credit limit, 13,000. We're almost there. Look at the account age. Or even worse, ever late. We process that application, they could get declined even with a 740. But part of our job is setting clear expectations. Letting them know, hey, right now, you have a 740 credit score. That account late might hurt you. You do credit repair, you can fix it for them. If not, it can still affect you. So this doesn't mean this client might get declined, or if they get approved, they might get a $5,000 in approvals, right? Which is not, or like $2,000 in approvals, or maybe max 40. I don't know, but this is going to be not a super easy profile to get funded a lot, right? So that's a team profile. Now, this profile is one with high utilization, very straight to the point. Utilization should be below 30%. 714, account 12 years, credit limits look great, 5 years, open account. So all we're missing here is just bringing down the utilization, which is going to be a lot of your clients, believe it or not. What can we do with this client? I'm bringing out a partner that knows how to high utilization Thursday. He's going to talk about that. So what does a good credit profile looks like that can get funded a lot of money? Let's take a look. Credit limit, 70,000. Utilization, 16%. Account age key, 13 open accounts. Look at the total loan amount, 739. All this account, 18 years. This is a great profile. This one, similar, 68,000, utilization 0. Total there, not as good as the other one, but still pretty good. This client, we can probably give them 50K just with one bank. Credit limit 200,000, utilization below 30%, so that's good.
The area, I have a question. To go back, the
questions for tomorrow. I don't have, because I have to keep going. I have a hard stop at 1. I have a lot to cover. So you can either post a question on the community or tomorrow from 11:30 to 12 o'clock. Because again, I have a lot of information. I don't need to be rude, but we'll answer it tomorrow. No problem. You just post it in the community. So those are the examples right now for the credit reports, like the different 4 type of profiles that you're gonna encounter. You don't have to figure this out. You can just literally leverage Lombard, right? You can leverage Lombard real quick and then just upload a profile, right? As this thing is loading, upload from computer, categorize. You guys don't have to figure this out. Just use Lombard. Just gotta start analyzing that. It's gonna let you know if they qualify or not. That's simple. All right. So next, after you have identified the client qualifies, you want to send the funding agreement, right? Funding agreement is going to be provided to you, the resources. My internet's acting up a little. Let me turn off my camera. So next you send the funding agreement. After the funding agreement is signed, then that's when you start working, right? We actually automate this with our Loan Hero Elite program, so everything's automated for you. But either way, we're going to give you access to the funding agreement. You send it to your client. After they receive it, then boom, you start the process. You start the funding phase after you analyze what product you can do for them, and then either send it to your relationship manager if you have them, or if it's like a credit card stacking situation, or the right lender, or you do the process for them, right? Then after you get approvals, you send invoice for your services, and then you collect your commission from the lender. That's basically the customer acquisition flow. So let's break it down. All right, let's take a quick look. All right. So credit stacking. How to do it. All right, I'm gonna do my best to try to put this here. So customer comes in. We check credit report, FICO 8. That's the first step. Upload to Lombard the credit report to see if they qualified, right? Can I make this bigger? Can you guys see this fine?
tiny. You can see it, but it's tiny.
All right, so there we are. So let me just break this down for you guys. Great, just made everything a headline. All right, this will have to do. Anyways, wait, can I make it bigger? Give me 1 second. All right, whatever. So you upload the credit report to Lombard, pre-qualifying phase. After underwriting is determining to see if you can get them funded. Let Lombard do it for you. If you don't know how to analyze credit reports yet, Lombard will do it for you. If the customer qualifies, send funding agreement. to client after you have discussed the fee. Make sure that you guys agree on the fee, right? Then next, let me see, to the sending funding agreement, that means like by this point, you believe you can get them funded. That or Lombard told you, yes, we can do it for them, right? We can do them, depending on whatever shows up. So that here it tells us that we cannot do it for them, right? For this specific profile. But guess what? We show you options, what to do, how to monetize the lead, right? This is your best friend, Lombard. All right. So if they qualify, you send the funding agreement. What are the next steps? We're going to take them to Chase. Why Chase? Because Chase is the bank that's providing the most money. That's number one. But realistically, I'm getting ahead of myself. Prep the funding sequence. Tier one, we go to mainstream banks like Chase, Amex, Wells, US Bank, Citizens, banks that are one of the top 32, right? So we always go to these banks first. Why? Because they're inquiry sensitive. And then, they're inquiry sensitive and whatnot. Okay. Tier two, we go to community banks or regional banks. Banks like PNC, banks for Citizens. Again, you might not know some of these banks. Rightfully, you don't live in the state, you're not going to know about those banks. But if your customers do, then great, right? Here is part of the sequence. You want to get anywhere between at least like 2 to 3 banks, $40,000 to $80,000 average approval, average commission, $4,000 to $8,000. Tier two, we're going to try to get another 20 to 40K. Most likely it's going to be 1 to 2 community banks, right? So we made 2 to 4K with this. Tier three, we go to credit unions and super local banks. Okay. The smaller the better. Or ELAM powered banks. What is the ELAM network? I think close to 80% of all banks in the United States are being processed by US Bank. Because, for example, all those small banks and those credit unions, they don't have the capital to run a profitable credit card program. So what do? They white label the program. Just like how we have a white label program, they white label the credit cards. And they're still able to profit through the partnership. So even banks do partnerships like the ones that we're going to offer this week. So with an ELAM power on tier three, if you do it correctly, you can squeeze another 50 to 100 grand right here. We're talking about another like 5 to 10,000. Why do we leave these banks last? Because they're going to be run by TransUnion and not very inquiry sensitive like the first tier of banks. And you probably wonder, hey, Ariel, what about the banks? I need to know the banks. Don't worry about it. We'll get you on Friday. We're going to give you a list. We're going to give you something today. So relax. Now, tier four, optional, personal funding. Optional, right? We have a personal funding credit card sequence too. So at that point, what we recommend mostly, let me just mention it, whatever. Even home equity line of credit card. If the customer has a home equity line of credit, if they have home equity in their home, they will give them up to $250,000 with one credit card, secure by their. Okay. All right. So this is basically the process. Now I'm going to take it a step further because this is what's going to make you the money. Let's go to Chase Bank because everybody thought Chase. I'm going to break down Chase. This stuff that I'm teaching you here is worth $5,000 to $10,000. Somebody else will charge you 5 to 10 grand just to teach you the stuff that. This is literally how it works. So again, I'm just running over the delivery here. So Chase Bank, here's the process. Why I'm going to break down this bank? Because we don't have a lot of time, and also this is the bank that's going to make the most money. So client should deposit. The notes are going to be shared. Client should deposit $1,000 to $4,000 on bank account, on business bank account to maximize approvals. Actually, let me do this. So since you guys can't barely see it, let me just do this real quick. Sorry, I cannot share this document. My bad. This is from my other program. All right, this is gonna be better. Not 24. Let's do 20. Nah, let's do 18. All right, everybody should be able to see that. All right, hopefully everybody should be able to see that. Cool. So next step, Chase Bank. Client should deposit $1,000 to $4,000 in bank account, business bank account to maximize approvals. Next, after account is set up, tell client not to apply at the branch. Why? Because if they apply at the branch, it's going to be based on the algorithm. Nobody can control the application. Nobody can fight with the underwriter to try to get more money for your client. Nobody can do a reconsideration. But you have to tell the client, don't apply at the branch. After account setup, contact your relationship manager, RM, post client, choose Zoom or email or phone. Every RM is different, right? But before the call, you, the loan broker, should send the customer application, right? It's a different process, the customer application with driver license for identity verification, tax, and this is optional, but sometimes needed to optimize the application a little and make it a little bit faster. Tax ID form, aka SS4 form. And again, some IRMs might ask you for other things, but you want to get this documentation because why? The underwriter says, hey, we need to verify identity. We need to do this. You already have it. In some cases, utility. If Chase is asking for this information for your client, this is good. Oh, you promised me no documentation, sir. No documentation means no business tax returns. We're not asking for that. The bank wants to verify that you're you. Are you? Like, why are you afraid to provide driver license? I'm sorry. I'm just a little, if I get involved with a client, I'm a little bit of an asshole. But I'm just very direct and straight to the point. I've been doing this for a minute. And then usually I can identify red flags quickly. But anyways, you get this information, send it to your RM to show them that you are organized, so some might ask you for that. Okay. After RM, you notify after this, send to your RM, and then have them call the client. They call the client, they identify. They're gonna ask, hey, Mr. Customer, you? Yes, I'm me. Do you apply? Yes. Okay, great. RM sends DocuSign for requested amount, right? Now, when you apply with a relationship manager, guess what? You tell Chase how much you want to get approved for. And then Chase I think I'm teaching too much, but Chase can go up to $150K unsecured exposure with credit cards. Now, can the customer get $100,000? $150K? Yes. Have we done it? Yes. However, I'm going to be super transparent here because like I was getting these questions earlier. A lot of people, they're not going to tell you stuff online. And you're only going to learn this with the right coach and also the people that are actually doing this. And then in rooms like this. Oh, sorry. Just everybody should mute themselves real quick. All right. Just quite cool. All right. For client to get more money and more approvals, they should have. Sorry, can you guys mute yourself, please? Just keep muting everybody. They keep muting themselves. Thank you. For client to get more money and more approvals, they should have plenty of cash deposit. Example. We had a client with $100K BCC from just Chase last week. Client, on top of having the right data points, had established relationship with Chase. Client had $80K deposits sitting on their account. Now, not everybody is going to have that established relationship. That's fine. Some people with branded relationships. We have data now over $100,000 with Chase. We give the credit cards, now the business line of credit. So what happens here? Like, what can we do? If you have a client, they have a lot of deposits, or they have some money sitting around, maybe from another player or something like that, tell the client, deposit all that money in that business bank account to increase the amount of approval. So we can get you more money, right? So we can get you more money. So that's part of the process, right? That's basically how you get those large approvals. In very few cases, it's not 2021 again, that the customer just had a tech credit profile and they will get the 50K. More has to happen behind the scenes, or they have to have solid relationship with Chase. Also, the longer that the LLC has been open, the higher the approval and the higher chance of the approval. And that's just Chase. That's just one bank. So now imagine from one bank, we were able to get, I don't know, like 20 to 80K. I don't know. So that's total $8,000 in commission from just one bank. And we still have the other tiers. We have tier 1, right? We have tier 2, but we haven't even finished tier 1, right? We have tier 2, and then we have tier 3, and then optional personal funding. So that's basically the process. That's how it works. That's how it works, right? That's literally how it works, how credit card stacking works. Now, the another part that I forgot to mention, so where do they pull from? Okay, so let's say you go to Chase, most likely it's not Experian. Amex, every state is different, but they're not pulling Experian. Once you have 2 credit card approvals per bureau, go to the next bureau. You have 3 bureaus: Equifax, TransUnion, and Experian. Experian can be the toughest, so we're gonna go to Experian banks first, right? And then tier 3, Elon. Again, this is what you can make some pretty good money here with this post TransUnion, right? And then leave the personal funding for life. So that's just one strategy. This strategy right here, we have mentees just focusing on this, making $30,000 to $50,000 a month, just doing this, right? They just focus, they're laser focused. We want to make sure we have the perfect credit profile. What does the perfect credit profile looks like? Actually, the minimum requirements, right here. It has to be the FICO 8 credit score. Mr. Customer, send me a tri-merge, all 3 credit bureaus, credit report. Make sure it's the FICO 8 score model. Where you can get that? It's on the resources, on the classroom. I just drop the Identity IQ link, please, on the chat so people can sign up with them. So you send your affiliate link to your client. Hey, Mr. Customer, you can get your credit report from here. After you have it, you just send them my way. That's a long way, right? We see. Next, we're gonna make sure they have less than 3 inquiries in the last 6 months. The lesser, the better, right? Utilization should be below 20%. And that's right now. The beautiful thing about being in a community like this, or working with somebody that actually has a funding company, you get updated data points. This might change next month. It might get better, it might go worse. And we're going to adapt just based on what we're seeing. We're not just getting this information from, 2 + 2 = 5. I'm going to decide to post this. No, we see that we run an approval audit at the end of every month. And we're taking a look at, hey, how many people got approved on the 20%? What about the people at 30%? Barely nobody got approved, or 35%. Okay, so now these are the new data points. They just got updated, right? No late payments. Preferably. If they have 1 or 2 and they're like older than 2 years, will we run a sequence? Yes. But again, you want to make sure that they're not pulling from, you're not applying at the bank that they have the collection at. No regulatory marks. No bankruptcies, no judgments, and no charges with that bank. No, but post the other link, Jax. It's on their platform where it says credit reports, it says credit affiliate link or something like that. Now, don't use that link. It's it's only important links. No, it's not there. Actually, let me just get it real quick. Or I might have moved it, who knows? Yeah, I don't know what the link is. Never mind. Oh, credit vendor, that's the link. Let me just drop it real quick. Make sure you sign up with them so you can make money. You pay a commission for every credit report that they're paying. That's the link. Make sure you use that link. It's on the chat. So that's credit card stacking. This strategy works very well with startups. So you're able to catch almost everybody who wants to start a business. This worked with somebody that just opened up the LLC yesterday. As long as they meet these requirements right here. So now you're able to get even more clients. You don't have to wait for clients that have been in business for 3 years and they have to submit you a whole bunch of financials. Here are some banks that you can do this with. Take a screenshot or just watch the replay. Does that make sense? You guys have clarity, more clarity now on this. Okay, cool. That's how it works. So what's up, Omar? All right. So that's basically how it works. That's basically how it works. Next, merchant cash advances. This can make you a lot of money too. It's an advance on the receivables of the client. It's not a loan. So on average, you're going to get 60 to 80% of the average deposits for the last 3 months from a client. All you need, 3 months worth of bank statements. That's it. It's an application, driver license from the client. You send it over to one of our lending partners, so you can send it to us. We actually are partnered up with over 113 banks, lenders, private lenders that do this type of loans. Or you can use the ones that we're going to give you on Friday. They analyze the application. Sometimes you get an approval same day. Right away. Guess what? These are the minimum requirements. 3 months in business. $5,000 monthly gross sales. No minimum FICO. And you can get paid anywhere between 5% to 25% of the funded amount. Which is great, right? So on $100,000, it could be $5,000 to $25,000. The worse the credit score, the higher the fee, and the more money you make. The riskier the deal, the riskier the approval, the more expensive it's going to be for the client because they're very super risky, the more money you make. The amount of time for application to money in your bank account is 1 to 2 weeks. Sometimes within a couple of days, you get paid. That's how we have a lot of people using this. With clients that cannot get funding anywhere else, and then they're able to just tap into this because, and look, I didn't use to offer these loans before. What happened? They didn't get them from me. They will get it somewhere else, and then we come back to me later. Hey, Ariel, I know you didn't offer this type of capital. I got it somewhere else, but now can you help me with something else? Damn, like they just made 10 to 20 grand. But they went somewhere else, and now they're coming back to me. I'm not coming back to the best, but like I just missed out on money. So even though you try to coach somebody and teach them, like they're still gonna do what they're gonna do, and I decided years ago, you know what? We're gonna get paid. We're gonna get paid when I make money. I don't look because the customer's gonna get anyways. We're here for that. Super simple. 3 to 6 months of bank statements. You can use Lombard to analyze the deal, and it works well with back credit customers. It could be a bridge solution. I'm gonna give you an example. Let me give an example of a situation that we have right now. So we have client looking for SBA loan, $3.4 million. Got the approval for the client for the $3.4 million. SBA deal won't close until 2 to 3 months. Client is opening a restaurant and it's already under contract for the lease. So he's bleeding $40K every month that the restaurant is not built. And then by the time he got to us, he was already on his second month. I'm trying to figure out how to get the money. So he's out $8K so far. So now we got him a bridge loan with our lending partner for $700K. Funded in less than 2 weeks. On the $70K, we may close, that was like like $52,000, I think it was, that we made on that deal before the client got funded. So that's $100,000 was expensive for the client. However, think about it this way. They lost $80K so far. If they wait for SBA deal to start build out, they will lose, let's say 3 months, just to be conservative. And this I will broke it down to the client. So 3 times 8 is 24. I don't know if my math is correctly. So what have been 240K total losses. They pay for the debt. I think it was like 140K, something like that. 140, 150K that they pay. We got paid our direct commission from that. And then once the SBA deal closes, I'm getting 1% from the lender and 2% from the client. So let's do the math, right? Once everything's said and done, $3.4 million times 3%, $102,000 plus the $52K that we made so far. That's $154K that we made. Client is happy because the restaurant is under construction. They don't lose $240,000 plus the opportunity cost of the months that the restaurant is not open. And we made a lot of money. We're going to make a lot of money, right? So that's just one example where an MCA kind of makes sense. A bridge loan to bridge the gap between that deal. Let me see if I have the term sheet for the client, for the approval, all that stuff. Let me see. I have this thing here to show you guys what our term sheet looks like. I might have it. Am I out of time? Once I have this ready, what I was saying, again, I just go based on how I feel at the moment, and then I just wanted to share with this stuff with you guys. And I found the term sheet, so I'm about to show you guys. Actually, the approval was for 3.1, so it's not. There you go, $3.1 million for this client. We're getting paid 1% directly from this lender, and this is the rate on a 10-year term, super affordable for the client. And then again, we're gonna close to 150 grand in commissions. So this stuff is hard to teach, right? This is why I say you have to think outside of the box, like I mentioned earlier. Okay. We still have a lot to go, but are you guys getting value so far? Are you guys liking the way that I'm teaching this stuff? Again, I'm just getting feedback to see how I'm going to keep doing this meetings and whatnot, but these are real case scenarios, stuff that makes sense. You guys see the money. Again, we try to monetize everything. Your average funding person, they're going to show you credit card stacking, and that's pretty much it. That's all they know how to do, one trick pony. So, next, actually, I missed something. I apologize. I missed something. My bad. This is important. Back to credit card stacking. And this can make a lot of money. So, startup, villas. I feel like teaching today, so you guys are lucky. All right. So I usually I don't dive this deep. So most banks have a startup SBA Express lock. The SBA has a program that's specifically made supposed to be easy for the clients to provide up to 25K for startups that you can apply per bank. So 3 banks that we're going to, let me give you 2 banks that this is really working with right now for a brand new startup. So remember, you just made money with the credit cards. Now this is not now increase sensitive. As they're getting the approvals, once you're done with your sequence, then you start hitting up these banks. You guys can do this on your own yourself too, right? TD Bank and Wells Fargo. Let's break that down. I feel like teaching today. You know what? It might be a little bit long, but I want to make sure you guys show up tomorrow. Wells Fargo has a product for startups under 2 years, right? Let's take a look. I'll break down how to get it. Most clients are going to qualify. They have to apply for this other branch. They have to have a business account set up before they apply. They cannot just apply for that directly. So two products. Well, to get the startup one is gonna be this one, 5 to 50K, but the FBA express line is gonna be maxed out at 25K with them. No documentation. As long as you meet the requirements that I showed earlier here, the credit profile, this right here, and then enter. Oh wait, this is not. Where's my thing? Oh, right here. SBSS score. Small business service score. Range from 0 to 300. To get it, go to NAB.com, sign up for NAB Prime, and add SBSS score monitoring. $60 per month. If client has SBSS 190 and above, they qualify for this process. So that's a combination, the personal credit plus the business SBSS score, which is populated right after you open the LLC, believe it or not. So 190 and above. If the client has 190 and above, then you can go to Wells Fargo, request for the startup business line of credit, right? Up to $25,000. Honestly, if they have established a relationship, they might get them the full 50K. But in most cases, it's gonna be 25K for a startup, right? So you get, that's another $2,500 that you get right there. So how much should you ask for your client? This is based on stated revenue. The bank knows it because the LLC just opened. So how can they justify stated revenue? Your client is to be able to articulate the need for the line of credit, right? You should provide a script, and usually goes like this: I need a line of credit for working capital and emergency expenses to keep growing my business, or to flow payroll. Those are the best reasons you can give them, right? Second, how much you're gonna ask for? 10%. This for Wells Fargo. 10% of gross revenue or stated revenue. So your client is to say, hey, this business is going to make $250,000 a year in the next 4 months. Wells Fargo is going to say, okay, great, we're going to give you up to 10% of that. Then I'm going to tell you as a range. I know that because I used to work there. 10%, right? 10% of Wells Fargo, 25,000. Now you say if the client says they're making more, they need to validate that. How? If you open a taco stand and you say, hey, this taco stand is gonna make $2 million in the next 12 months, your client should be able to answer, how many tacos are you have to sell for that? I'm gonna sell 50 tacos. That makes no sense. Look, the bank just wants a story that makes sense. Honestly, I'm gonna be making. I have a contract. I'm opening my taco stand stadium, or I have a contract with an location that has a lot of traffic. We estimate to sell 100 tacos a day, X amount of dollars, right? Let them do the math. But again, this is all stated revenue, very limited to no documentation. We do this all the time. Second bank for the startup. So you guys can make money. I want you guys to make money. That's what we're here for. TD Bank. It's my baby. I love TD Bank. TD Bank, where are you? Okay, let's go to TD Bank. By the way, no relationships needed for these banks. However, when you're applying for TD Bank, it's online application. It's not even done on the branch. No relationship required before. No bank account set up. Nothing. You can literally just go here if they meet the requirements that I mentioned earlier. Small business, loans and line of credit, and you guys are gonna love this one. Apply now. Oh, right. You got to click sign up, and you just follow the prompts. Under $100,000. If you're a brand new startup, just ask to match 25,000. However, guess how much TD Bank is willing to give you? TD Bank is willing to give you, with no docs, up to 25% of the gross revenue or stated revenue. For startups with businesses less than a year, you're gonna be capped out at 25K, unless you have a strong relationship with them. But in most cases, 25K. Now, if the business has been established for at least a year, then it's gonna be $100,000, no documentation. You just take the customer, apply to the portal, enter the numbers. Just know if you want to 100 grand, customer should be making at least, I forgot the number again. It's been a long day. I've been up since 3 o'clock in the morning because of my baby. Well, you guys do the math. 100 grand, 25%, whatever that is, $500,000. I don't know. So you're going to get up to 25% of that, right? I think that's the right number. $400,000 against your 100 grand. They're not going to ask for any documentation. However, if it's over a year, in some cases, the credit score is not that strong, they might ask for 4560, which is a request for tax transcripts, at least to verify income on the personal side or business side. TD Bank, if they have been in business for 3 years, you want to keep it at max 100K, because after $100,000, they're going to ask for documentation, right? Which is great. Your customer has it. Now you can cap out to 250K. Documentation could be 1 year business tax return, 1 year personal, right? You must be within the bank's demographic. And if not, the client must open a foreign LLC, but we're not going to talk about that strategy today because we still have too much. We have too many slides, right? So there you go. There you have it. That's basically the process for that, for the startup business line of credit. And then, so I'm going to skip this part. SBSS score, you can take a screenshot, just watch on the replay. So the SBA requirement for the express lines, 155 and above. And then for traditional products, 190 and above. And it's just made up of the personal credit utilization, previous business history. This is what they rely on. For documentation, this is it. Anyways, like just use Lombard for the rest. But TD Bank, Chase, now you need to be in business with them for at least 6 months. But Chase will give you 10%. Chase will give you up to 10%. And then Rashad is correct for filing. 10%. So for you to get it to 450K, your client must say they're making $2.5 million. And then anything under 250K for the business line of credit, with the right relationship, it could be no docs. We have done 250K no docs or just year-to-date financials, right? That's pretty much it. PNC Bank, they're going to ask for 10% of the gross revenue. They just switched to very relationship-based. Need to be in business at least a year. And you need to ask for 10% of the gross revenue. However, the SBSS score needs to be 190 and above, so check it. If you have applied in the past and then you didn't get an approval, you apply, make sure you check it. You definitely want to check with PNC Bank because they're quick to decline you. And then that's pretty much it. Like you said, 10% of the gross revenue. Make sure you have set up the account and leave it open for at least 2 months. Deposit, the more money you deposit, the better. And then you can double dip with PNC Bank, get a business line of credit, and also get a credit card. So again, this is the game at a high level. This information right here, if you guys apply it, just make sure you watch this replay a couple of times, especially when you're about to take a client to the sequence to and maximize the chance of approval. This can make you a lot of money. You master this stuff and keep doing it and getting more relationship managers can make you like an extra 200 grand before the year's over. If you can get clients. Again, this is just one part of the puzzle. This is the most important part. So let's keep it moving. You can charge to help somebody set up business credit profile with DMB and then the whole net 30 and net 6090 accounts. This is something you can charge $1,000 to $3,000 upfront, right? We're not gonna break it down, but we're gonna give you some resources for this. So just again, Lombard is your AI companion for all these processes. Lombard will help you put together, analyze a credit report, on the personal side. You paint the scenario to Lombard, right? And again, we're gonna have continuous training too, of how you can build the business credit for this person. It will give you a business credit action plan. You can sell that. The customer can apply. You can charge $1,000 to $3,000 upfront for that. The deliveries are super easy. Mr. Customer, I'm gonna help you guys get paid for it. And then you need congruency. Congruency is super important in business credit. What is congruency? Everything needs to match. What we try to do is to make sure that to avoid red flags. I know it's a lot of information, but just stay with me. For example, your client's applying, this is for a business line of credit, and then online, the business address on the Secretary of State records doesn't match what's on the application. It could trigger a manual review, and it could trigger documentation. So your customer needs to look like a business that's in sync online, on their website. If a manual review is triggered, then they might go to the website. Make sure that they have a website that is going to have less questions for the client. This is part of doing the business, the setting up people for business credit. You have to make sure the business looks like a business. They should have a business email, business website, right? Making sure that stuff matches online. So you can have congruency. So when the underwriter or if the algorithm is checking on their own systems, the information is matching, it doesn't trigger a manual review or for documentation. The less questions they ask, the more questions that we ask for upfront, the higher the chance of the deal being no documentation. I'm a firm believer you should always charge for your time. Somebody wants to pick your brain after you guys pay whatever you pay for to be in this room, right? After we have some people taking, this is the third time taking the challenge, like again, just because I'm always sharing the information, whatnot. And you spend so much time going through the courses, paying for coaching, paying for training, applying stuff, trial and error. To pick my brain, you have to pay. And you should charge as well for your time. Now, here's a strategy. Hey, Mr. Customer, I charge about $250 for a business credit consultation, right? This is what you don't want to charge. However, I'm willing to waive it or discount it from whatever approval I would get you, if we get you an approval. However, this is non-refundable. What are you doing the business credit consultation? We have a checklist that's going to be provided to you in little workbooks. So you just make sure you follow the checklist with the client. Make sure that their business is compliant. Make sure they have online congruency. Then you're going to check their personal credit report. And guess what? You're going to use your best friend, Lombard. Why? So, build me a credit action plan for this client so I can charge. And let me know how much to charge. I'm sure you guys have to make money the real way, right? Back in the day, you had to manually create a template, a process, a whole bunch of different things. And if you're lazy, you know what? I'm not doing this. I'm going to say skip, hard skip. And then you let Lombard do what it do. We're going to come back to Lombard, right? It's going to give us a credit action plan that we're going to charge for. I'm going to come back to it in a couple seconds. Make sure charge for your time, $50 to $500. And then now you get and then take an opportunity to cross-sell. They have bad credit, you do credit repair, pitch credit repair. They have good credit, then like now pay your services. Hey, Mr. Customer, here's everything that you need to do. I'm gonna give you a credit action plan for free. The customer is gonna take a look at that. And then once they take a look at that, I'm not doing this. It's too much work. I'm not doing this. How much are you gonna charge, Mr. Customer? I'm not gonna charge you until you get funded. That's when you pay me. And that's the gift that keeps on giving, right? It's all about how you position the sale. Then you can charge for a funding plan. Some clients, I don't want to pay a success fee. That's too much. That's fine, Mr. Customer. No problem. It's going to be $3,000 for a funding plan. No success fee. Capped at $3,000. I'll analyze your credit report. I'll analyze your business credit. I'm going to give you a tailored plan to whatever you have going on to put you in the best chance of approval. I understand you don't want to pay for the fee. However, I'm going to tell you which banks to go. But it's not going to come with my relationships, right? That I have to charge for those relationships. I have to pay for those people. You can say that, or you can use, honestly, you still them to apply for and do a one transfer, but then make sure you charge more than $3,000 for that. And then again, we pop this all the time. But then I can tell you right now, when you present that, like the client's going to go for the 80% chance they go for the success fee, unless it's a business that's actually making money. They don't mind paying. And if they're making money, guess what? Like the beautiful thing about this, you are asking how much they're making. So you have a client that's making over $500,000 or $1 million, then this should be $6,000, right? Or just let them pay the success fee. They cannot have both. Or yes, sell them coaching. Where now, okay, look, I'm gonna give you a funding action plan, and I'm also gonna be with you through every step of the process. You get about 1 call a week, and you get one revision of your funding plan. $4,000 to $6,000, just for you to tell them to go to Chase and do exactly what you just learned today. But guess what? They're gonna get results, right? They're gonna get results, and then boom, look, credit action plan, step by step. How did it take? Imagine, tell the client, look, it's gonna take me 3 days to do this. 3 days to put this stuff together. Yes, give me the branded client PDF. You see the power of artificial intelligence, how it makes your job easier? Isn't this crazy? 2 years ago, all this stuff had to be manually done. Obviously, you can upload your logo and stuff, it will do it for you, but yeah. So boom, you can charge for this document it's going to create it, and you can retrain it so the document works the way that you want it to work. All right. We're running out of time. Again, that's why I couldn't do questions live. So I'm going to do my best to go over a couple of these. Again, you're getting a full resource, breaking all this stuff down. Equipment loans, you charge anywhere between 1% to 5%. All you need is a purchase order for this. And then some of them could be with full documentation, or you can just use one of the lenders we're going to introduce on Friday. And then just send in the purchase order and then let them take care of everything. You pay 1% to 5%. On the back end, you can always charge up front. 580 minimum FICO to do this, and sometimes no revenue needed. Business auto loans, right? Look, you can charge $500 to $1,500 per approved auto loan. If they have been in business for at least 2 years, the LLC has to be established for 2 years. You can leverage Bank of America to get them up to $100,000 right away, approval. Before, you didn't need to wait 2 years. But then the credit vendors online, somebody caught up and then they changed it. They underwrite your policy, but right now it's 2 years with Bank of America, or you can leverage small credit unions. I have somebody here. Let me see here. I might not call you right, but we have somebody. It's probably a great asset for our community. Greg, he's to work in that field. But you can also go to the manufacturer financing. I got you. Yeah, definitely we're gonna use you in the community so to get some more inside information. But you can correct me if I'm wrong. But then the actual dealerships will give you, some of them will give you manufacturer financing that will be based on the business credit under the LLC that doesn't report to the personal. I know I did that when I bought my BMW i8. I don't have it anymore. I sold it. I think I can't remember if I did it with Mercedes Financial, but I definitely use BMW a lot. I did it with Porsche Financial, right? We've done it for clients. Porsche Financial does not show up under the personal. BMW Financial does not show up under the personal. I think GM doesn't show up under the personal. I can't remember about Chrysler, but you can ask directly you can coach the client to ask for the finance manager. You just let them know that you want to apply for manufacturer financing, the financing program that the manufacturer person has. Oh, and a quick hack for those of you that want to buy a Lamborghini. Again, I'm not really interested in that anymore, but those of you that had ever thought, hey, I want to get approved for a Lamborghini. So you can go through Porsche Financial as a backdoor. Right? Get approved with a Porsche over there, have it for 6 months. After you have it for 6 months, then you can try to apply for Lamborghini Financial, because now you're in the financial system. As I used to say, through Lamborghini Financial, and then that can lower the down payment for that. But I have more resources on that stuff. So 680 credit score, comparable card credit is super important. Right? Comparable card credit is not important when you're applying for a business auto loan. So they're going to take a look at what type of debt they have had in the past. So you have somebody trying to get a G-Wagon for $150,000. I don't know what they cost anymore. I saw mine too. 150, 180, 200 grand, whatever it costs you. I don't know. Your customer's last car loan was like 50 grand. It's either going to be tough for them to get them approved, or they're going to have to put a large down payment. So I think they usually want to take a look at, you get 1.5% of the average balance of the last 6 months of your auto loan, something like that. Yeah, that's basically it for the part. Microloans. Guess what? The SBA has a micro lending program, 620 minimum credit score. You take them through this website right here. I'm gonna drop it in the chat right now. It's actually on the important links on the community. They have a lot of information. Hopefully, I'm not feeling overwhelmed, but that's what the recording is for. That again, the credit card stacking is what's gonna make you the money. But either way, boom, you take the client to the site, find out anybody in the micro lending program through the SBA. They can get approved up to $50,000 with bad credit. On average approval is like around 20. And then minimum credit score is on average 620. But we have seen people with a 580, 560 get approved, and then you can charge 5 to 10% for this. Or this is a great micro lender that we used in the past. Action Opportunity Fund. CDFIs, Community Development Financial Institutions. I'm going to talk about that tomorrow. And then, we're running out of time. Again, so tomorrow, make sure you join on the 11:30. I'm going to break this 3 parts down. These 3 remaining ones I do have to go, but the homework is super simple, right? The homework is simple. This business is all about relationships. I want you guys to try to connect with a relationship manager. I'm going to give you a quick way to do that. This is part of day 4, but whatever. I'll do it today. Give me 1 second. All right. Create a profile on LinkedIn. You can copy mine if you want. Right. And then you start searching. Let me see. I don't know. You're in Texas. Chase relationship manager. Make sure your profile set up first. It says what you do. Right. Boom. There's 3 potential contacts. Right. 3 potential contacts. Actually more than that. 1, 2, 3, 4, 5. Not this guy. He's a manager. 6, 7, 8, 9. Look, I will email. I will connect with every single person here, and then I will send them a message. What type of message you send? Use Lombard. We'll let you know. Hey, I'm reaching out to a guy that has been in business banking at Chase for 50 years. I want to make sure I get him a connection. What message should I send? And then even try to copy and paste a profile into Lombard so to create a custom message that addresses, hey, I see your experience, Bank of America here. Let's work, let's make money. And then boom, just try to connect with at least one person. You'll be surprised how willing they are to talk to you. And you let them know, hey, I'm looking for a local business banker that can help my clients. I'm a funding consultant. I'm a business consultant. And again, we're looking for a bank that truly cares, not a bank, a banker that truly cares about funding their clients, small businesses. Can we work together? And so let's set up a call to see how we can work together and find out more about your process and your programs. And then that's pretty much it for day 2.